I know that you're a big fan of SmartBiz. Can you kind of break down what that is? And like, I know that you're probably an affiliate of SmartBiz as well. So like, could you kind of tell people like the best route to get an SBA loan if they want to do that? Is SmartBiz the best way to do that? Like, can you kind of speak on that?
So, yeah, SmartBiz is basically they administer SBA loans. So the thing with SBA loans, right? Because there's a lot of companies that pretty much are able to provide SBA loans, right? Yep. It's all going to be based on like how well do they close, what's their loan origination process like, and things like that. So SmartBiz actually works not only just with SBA loans, but also bank loans as well. So I'm going to pull up real quick. I'm sure Irv probably went over some similar data points as well, but I'm just going to pull up some of the like requirements in terms of like what you should expect in terms of like a SBA loan. And when I say SBA loan, I'm talking about 7A loans, 504 loans,
micro loans too.
Yeah. So here, let me actually pull this up. Let me pull this up real quick. SmartBiz loans. So I like what I like about them is that they have a checklist, right? So they have, traditional term loans and SBA working capital loans, right? So like the 7A loan, oops, can y'all still see this?
Yep, we can see it.
Let me here, I'm trying to zoom in a little bit. 30,000 to 350,000, right? So they lay out the requirements right here, okay? 2 years minimum time in business, U.S. citizen, a 660 or higher FICO, and I believe they're going to be pulling the Experian. And so I don't know if you guys see this right here. I'm gonna go over this with another example, hopefully, in just a second. So you see this right here? GDSCR, right? So this stands for Global Debt Service Coverage Ratio divided by your business debt service coverage ratio has to be greater than 1.15. So what the hell does that mean? So global debt service coverage ratio combines your business and your personal debt. That's why I always say, like, it's not like when we're talking about small business credit, not corporate credit, but small business credit, your personal financials do come into play if you're personally guaranteeing it, right? Whether that's your credit, whether that's your your debt, So pretty much what they're looking at, global debt service coverage ratio combines your personal debts and your business debt. Okay, so add up all of your personal liabilities. So if you have personal cars, you have a personal mortgage, you got personal credit cards, personal loans, student loans, they add all of that up. Then they look at your business and then they combine it. And then debt service coverage ratio basically is what is your monthly debt obligations, right? Compared to how much income you're producing. Right. So they're basically combining all of your personal debts, your business debts, your personal income, your business income. Then they create this ratio, and the ratio has to be greater than. So actually the global debt service coverage ratio is your personal and your business combined of all beneficial owners. So if you have a business that has multiple owners, they're going to combine everyone together. But let's just say for simplicity, it's just a single person, a single member LLC, right? So it's just going to be one person. So they're going to take that ratio divided by your business debt service coverage ratio, right? So your business debt service coverage ratio is basically your business debts, right? Divided by your business revenue. Because they want to see, okay, do you have enough money? Are you making enough money to cover all of your debts? And basically they want you to be able to have a certain amount of cushion between how much money you're making and how much it costs to make your monthly repayments or your debt service. Your debt services are your monthly debt obligations. So your monthly payments. So your income has to exceed your debt by a certain or your monthly debt obligations by a certain ratio. That's pretty much what that is. I'm not going to get into that. Minimum annual revenue requirement, 250,000, no outstanding liens, bankruptcies, charge-offs, and current on all government-related loans, even federal student loans. So that's pretty much, I would say, you know, with the 7A. Now they have like 504. Let me see if they have that. Okay. And then here they have like certain like criteria as well, that you basically have to just be in compliance with. Now, like I said earlier in the call, you want to make sure you have an accounting software. That is so important. If you're trying to get these big boy loans,
Paperwork.
your financials have to be in place. Like you're not getting no PG, no doc loans for $250,000. It's just not happening. Nowhere.
Don't believe the parrots, y'all. You know what to do. Put up the parrot emojis, man. When you see them
like,
people talking about that stuff, just give them parrot emojis.
Maybe, you know, I'm not going to say, you know, maybe you can get 50K or 75K, but when we're talking about 250,000, $500,000, you're going to have to show some paperwork. There's no ifs, ands, buts. Think about it, right? Would you give somebody money? Would you lend somebody money without the data to make an informed decision on how they could even have the ability to repay it, you know, confidently? Like it just doesn't make sense. Right. So anyways, yeah, these are just the basic requirements. So they have what's called liquid credit. So I believe this is going to be for SBA. They use what's called the Small Business Scoring Service. So that's the FICO SBSS, and that's another composite or you know, combination of like your personal and business credit. I think Irv talked about that as well.
He broke that thing down, guys. If you have not watched that call, it's a 7-hour call in the business credit. You guys can go watch it so that way Plug can focus on the other stuff. Yep.
Absolutely. So yeah, that's just one thing. Like it's not like, you know, like like this is just an example. Like we're talking SBA, Small Business Administration, keyword small business, not corporate businesses. So even SBA has guidelines on like the what they qualify as. So small business, you know, your personal credit is still going to come into play. So yeah, this is just basically it. They do a cash flow analysis. So, you know, 2 years of business and personal taxes, year-to-date profit and loss and balance sheet, business debt schedule. This one is something that a lot of people don't talk about, and a lot of institutions are asking for this stuff, a business debt schedule. I've had to put together recently maybe like 3 of these, you know, for different line of credit applications, right? 6 months of recent bank statements. Okay. So they have all this online. You know, I'm not going to waste any more time on this. So yeah, SmartBiz, and then they have term loan requirements as well. So these are going to be similar, but slightly higher than the SBA requirements. And so yeah, it is going to be similar, but I think with these, they're a little bit more stringent because these are actual commercial bank loans. So they might be a little bit more restrictive. And right here, like they kind of explains like the loan debt service coverage ratio, business debt service coverage ratio. So it says determined by business income and debt along with personal income and debt. Is real small, so you guys might not be able to see it.